Let me now bring on board BK Sharma. He represents HDFC Securities. Vinod, morning. Thank you for joining us. After a 15% appreciation this year, are you advising your clients to exercise caution, or in your assessment, this rally has still some more steam left?
If you were to look at anecdotal evidences that are coming out, it does show that this rally is slightly different than the 10 to 15% bounces that you have. One is that the ratio of stocks which are above the 50-day moving average is the highest so far. In that we have in the past 5 rallies in which we have seen a rise of more than 10%. The second most is that in other rallies, if people used to buy the breakouts, they didn't used to sustain. Now in this one, it is sustaining. So if the breakout sustain, and if the common investor is feeling empowered from the fact that his portfolio is going up and he's making trading profits, so he's willing to take those extra risks. So currently, so far, this rally appears to be much different, and it has all the hallmarks of a bull market in the making. However, even if the rally is in a bear market or a bull market, it does have its moments of correction. So obviously caution is, after a 15 to 17% rise, I think caution is mandatory. And if the banking sector has run more than 30%, some of the caution is mandatory. But I would be willing to buy the dips. I'm not here to say that the best part is over, and therefore I'm willing to give this rally a chance.
Vinod, out of the 4 numbers which I mentioned, which are the ones you're tracking?
I think cement is one industry which is going to outperform in the coming months. So therefore, the growth in both ICC and Ambuja can continue in terms of stock prices after they give some sideways accumulation. But the southern companies where the prices have remained firm for the first time, so those have done much better. So I think, or even if you look at the small caps, I think the entire industry is doing well. So this will remain an industry in which you buy the dips. But I think Ambuja is unlikely to disappoint in terms of results. And we would be also looking to buy Hindalco at dips in case the results are okay.
VK, how did you read into Bharti's numbers, and does it seem like the stock could weaken from the current levels as well?
The stock definitely is weak technically, and fundamentally the falling profits is not a new thing to the fundamental investors who are looking at Bharti from that perspective. I think it's been going on for quite a while, and in the last quarter, because of the kind of 3G and 4G services which are they going to let's say roll out from March, I think those expenditures are behind the current low profitability of the company. But investors are looking at Bharti from this perspective, that among the lot, this is one company which has done its homework well as far as meeting the legal requirements are concerned, and has played by the rule book. From that perspective, I think investors are going to remain with Bharti for a while, because that continues to be the strongest of this sector, and as prices fall another 5 to 7%, I think it will become more attractive.
Vinod, after a 15% run-up, which is one large cap stock or maybe 2 large cap stocks where you are fairly confident that even after the recent run-up in next 6 months, investors and our viewers can make another 20%?
I think one have to give oneself at least a 6 months period further from here to make 20 to 30% on these stocks. But among the large caps, I would play the theory of the lower interest rates which are going to come, and that is going to effectively make banking as a better play. So if you were to purely look at, then maybe looking at Axis Bank or ICICI Bank, if you were to buy these companies and averaged out in the coming 3 or 4 weeks, I think you will be better off at least the kind of percentages we are talking about in the next 6 months, because essentially when interest rates cycle begins to turn down, when interest rates are cut, the market per se improves and the banking sector outperforms the overall market, and interest rates are yet to make a make a beginning as far as the cut is concerned, or whatever cut we have seen is in the CRR. So I would give banking sector, although they have run up almost 30% from the December end levels, but still this is the sector I'll buy, and to name, I'll look at ICICI Nexus.
What do you make of the NASSCOM guidance and the Cognizant guidance? NASSCOM is of the view that large cap IT companies or Indian large cap IT companies will grow in the region of about 10 to 12%. Cognizant, which is a multi-billion-dollar company, however, is confident of growing at 20% plus.
Yeah, Cognizant does deliver, but from our perspective, I think it's not a good news, because 23% is a big climb down from the 33% which it grew in year 2011. From that perspective, it's bad news for the entire sector. I think as people are losing opportunities in Europe, I think they are finding opportunities in the Orient. So TCS moves to that extent will only help it tide over this immediate crisis in Europe. So I think overall IT has not done well. They have, in terms of relative performance, they've underperformed the market, gone up by almost 2-3% only in the couple 1.5 months. So my sense is they don't have much room to fall, but there'll be buyers. If these stocks are available 7 to 8% lower, I think buying will come back. You're not going to see them being sold.